Hi, I'm Richard Randall, and welcome to The Real Estate Voice with Barb Schlinker, the owner of Your Home Sold Guaranteed Realty. This is the weekly radio show that informs and educates you on how to buy or sell real estate with Colorado's real estate authority, that is Barb Schlinker. Barb Schlinker is a retired Navy veteran. Barb is an author. Barb Schlinker is a pilot, and Barb and her team enjoy all that Colorado and the Front Range have to offer. Barb, always great to be visiting with you. Now, we air the Real Estate Voice show every Saturday, and if you cannot listen to the entire show, it's always available on Barb's site, barbhasthebuyers.com. That's barbhasthebuyers.com, or just go ahead and search Barb on all of the popular podcast platforms, iHeart Radio, plus all of the others. Every week, the Real Estate Voice covers great information about the housing market and one of most people's largest assets, that is your home. Barb, what will we be talking about today?
Well, Richard, this recent bank failure in Silicon Valley, a lot of people are wondering if this is going to be a repeat of the 2008 mortgage meltdown. So we're going to talk about that. We'll go into a lot of detail about it. The news is all the buzz with this bank failure. It's very, very interesting. And then the second segment, we're going to talk about home inspections, because it is the biggest bane to home sellers' existence, dealing with home inspection issues once they've accepted an offer and they're moving on and they're packing. So we're going to talk about red flags to avoid on your home inspection when you're selling a home. We're also going to talk about the top agent hiring mistakes. I see this happen all the time where they hire. I just talked to a lady this week that called me and said, oh, nothing's going on. We put our house on the market, nothing's happening. So that's very common. And so we're going to give you some tools that you can use in order to ask the right questions, because picking somebody to handle one of your largest assets is absolutely critical, especially right now. The market has shifted anywhere from 5 to 11%, depending on where you are along the Front Range. You don't want to make that mistake in getting wrong advice about where to position your home to get the most money. And then the very last thing we're going to talk about, which people love talking about this, is how to get your house ready for sale. And of course, I always enjoy covering our hot new listings. Richard?
You really do. Plus, you've got great listings up and down the Front Range. Barb, now we've talked about these two banks that failed. It's causing a run on some banks, creating a lot of financial uncertainty in the market. Some people wondering, look, is history repeating itself? If you go back to that crisis in 2008, you were out here during that time. What impact do you think the bank failures are going to have on the housing market now?
I'm glad you brought that up, Richard, because, it's sad to say, but there is an 80% turnover in real estate agents every 5 years. So there's a whole bunch of real estate agents out there that have no idea what's going on. They're not used to seeing any kind of market shift, especially in the past 4 years. We've just been flying high, watching the clouds go by with the market values rising exponentially. And then, oops, wait a minute, something's different. So, but is this like the mortgage meltdown, or they called it the Great Recession? They had all these names for it. So first of all, my answer is no. What happened back then is that anybody with or without a pulse could get a mortgage. All they had to do was tell the lender, hey, I make $100,000 a month and I want to buy this $2 million property. No money down, 80% first, 20% second, and I want an interest rate that's 5% below the current market. And they were giving out those loans like candy. So people were getting 1% mortgage rates, and they were qualifying on the 1%, not on the amount of when it adjusted in 2 years. That is what caused the mortgage meltdown back then. Since that time, they have put new laws in place to ensure that the borrower actually does qualify for the mortgage that they're applying for, not at the teaser rate, but at the ultimate rate. So that's one big difference between then and now. The other thing that impacted overall market values declining back then was that there were so many people walking away from their mortgages because when the mortgage rates adjusted, a lot of people's housing payments went from, I remember talking to one gentleman that bought this townhome, and he goes, when I bought this townhome, the payment was $800 a month. And 2 years later, when it adjusted, it was $1,800 a month, and I can't afford that. That happened all across the country. And so people were like, well, the market values are declining. I'm just going to walk away from my mortgage. And the problem is there was so much of that going on. It's okay to have one distressed sale here and there. It will not impact the market. But when you have 30 or 40% of the market correcting like that, especially that quickly, that's what drove the prices down. We are not in that environment. Yes, we're in a bit of a price bubble right now. The values have gone up 40, 50%, depending on where you are in the front range, for sure. There is going to be some correction because some of that bubble took place because there was just so many people getting into buying homes, including Wall Street investors. They were outbidding live in the home buyers way over market value with cash. And so I remember talking to a Denver buyer. She goes, oh my gosh, we can't get a home. Everybody's bidding at least 100,000 over asking price. So that was going on just a year ago. And now it came to a screeching halt as soon as the interest rates went up to the 6-7% range. Since the mortgage meltdown of 2008, what has changed is the laws. In 2011, Dodd-Frank was passed, and it basically required the lenders under the threat of going to jail that they had to prove that these borrowers qualified for the payments. So that's one thing that has changed. So people that are living in houses right now, most of them have equity and they do qualify. So we're not going to see broad defaults, but this bank did fail. Now, I think it failed because they were in some risky investments, and some analysts went out and said, oh, we're going to short sale that bank, and it created a run on the bank. So it was very interesting. But at the end of the day, how will this affect the real estate market? It may just be a speed bump. It may have something to do with it. Just this morning, the rates dropped down almost 0.5% over this bank failure. So that's a good thing for the real estate market. But basically what the Fed decided to do was make all those depositors whole. So that's good news for people, that they don't have to worry about banking. Yet no executives at this bank are going to get paid. And they'll probably have to sell their assets in order to pay the government back for all the money they lost. So it's weird. It's a weird situation. It's complicated. It was too complicated for my brain. But one thing that was interesting that I discovered in my research is that when the pandemic hit, Richard, did you know that the Fed told the banks that they don't have to keep any reserves? They could take it down to zero. Did you know that?
I did not know that. That is crazy.
It's crazy, and they haven't changed it since. So we'll see if they regulate, but I think the Fed's really been messing up our world overall right now. And one of the big account holders in that Silicon Valley Bank is Open Door. Can you believe that? I mean, they lost $1 billion last quarter overpaying for homes. But here's the rub. 43% of the home buyers in this market right now are either millennials or Gen Xers. Okay, so what is that range? It's ages between 25 and say 51 to 55. They have only seen interest rates between 2.5% and maybe 4%. They've never seen 6 or 7%. Just to put it in perspective, I've been in the business since the 90s. And 2 years after I got in the business, the interest rates went from 9 down to 7. And I remember my broker doing the happy dance going, oh my gosh, we've never seen rates this low since the 60s or something. So this is moving to a normal market. It's just happening too fast. So my name is Barb Schlinker. I'm with Your Home Sold Guaranteed Realty. I'm the host of the Real Estate Voice. And we're talking about whether or not this Front Range area is going to crash, especially with regards to this bank failure. Are we going to see any correction in the market? And in the next segment, we'll be talking about home inspection issues to avoid when selling your home. So as far as the market data right now, Denver Metro all along the Front Range came out with some stats, and it's still pretty much a seller's market. I mean, the average days on market did go up. That was one change from maybe 35 to 49 days. The average close price is in the mid sixes. That's pretty robust. The number of sales are definitely down, and the median price is down or kind of even just a little bit, at least in the Denver metro area. Colorado Springs is a little bit different. So we bottomed out in December. It went up in January and back down again in February. So it's a little bit of a weak market. However, the inventory is still really low. So I don't think this market is crashing. It's just hard to get people unstuck out of that perception that they can expect to get the prices that happened a year ago. It's not going to happen. We've seen in the Colorado Springs, Pikes Peak region, probably about an 11% price correction. But if you're thinking of making a move, my name is Barb Schlinker. You can go to barbhasthebuyers.com. I've been on this website since, I've had this website up since 2014. I have over 27,000 buyers in waiting looking for homes. Usually I can find at least 100 buyers that are a high match for your home. So if you are thinking of moving and you want to get a free in-home consultation on what to do and what not to do to get your house ready for sale, go to barbhasthebuyers.com and click on that button, Find My Buyers. If you're not ready now, we have all kinds of free reports. You can go to barbhasthebuyers.com, click on the green button, Free Reports, and download all kinds of reports about how to get your home ready for sale, like the top 15 tips to sell your home fast and for top dollar. Richard?
So here, Barb, how are we doing time-wise, David? Should I go ahead and just do the out and preview the next segment? Okay. 3, 2, 1. You're listening to The Real Estate Voice with Barb Schlinker of Your Home Sold Guaranteed Realty. And The Real Estate Voice is brought to you every Saturday. You can listen to it right here. Your Home Sold Guaranteed Realty. And if you're thinking of making a move, call Barb at 719-301-3900 or visit barbhasthebuyers.com. Again, that's barbhasthebuyers.com. We'll take a short break. When we come back, we'll be talking about home inspection issues to avoid when you're selling your home. You don't want to miss that.